they ran for me. So who's nice?
Morena Koutou FRAC committee. We'll just open with our karakia and then we'll get on with our agenda. And if you would like to join in, our karakia is on the screen. Manawa mai te mauri nuku, manawa mai te mauri rangi, he manawa nui, he manawa tahi, he manawa ora e, ka whakamaua kia tina, huie, tai kie. And just a reminder that our meetings are live streamed, so if you are hoping for an audience, I think we'll be safe. But before we start our hui today, I just wanted to note a couple of introductions and one notable absence, which is, of course, the untimely passing of Adrienne Staples. It's always it's quite weird to be in this room when she's been such a rock and presence in our chamber, and she will be greatly missed. And we will be having our whakawatia for Adrienne on Thursday in these council chambers. Just wanted to note that the passing of one of our beloved committee members. But we also have new members on FRAC, and so I'd like to introduce Glenda Hughes, who's not unfamiliar to these chambers as a former councillor here herself, and who is our new independent member for our committee. So welcome, Glenda. It's lovely to have you here. In my heart of hearts and dreams, it was great to be having you and Adrienne reunited, but alas, the universe did conspire against us. We have also just wanted to note we have in attendance Councillor Duthie as well online, who's obviously very interested in the activities of Finance, Risk and Audit Committee. And we have no apologies, so don't have to do anything about that. And just noting that Councillor Makarini is attending this week online. We also have, any conflicts of interests to declare? No, that's great. Okay, and then we also have no public participation, so we're getting mercifully quick. And now I just want confirmation of the public minutes for our last hui. Does anyone have any amendments to bring forward for our minutes for last meeting? So I'll just ask for a mover and a seconder. Councillor Elder, Councillor Free, all those in favour? Okay. And then confirmation of the restricted public excluded minutes for the last week. And any amendments to that? It's all pretty straightforward. Can I have a mover? Councillor Elder and a seconder. Councillor Free, all those in favour? Great. Right, on to the agenda. We've got, and then we've also got, I did that now. Public excluded. And the restrict. That's right. And then we've got the RPE as well. So, is it the? Shall we swap it around? Okay. So, yep. Councillor Free will move. Councillor Elder will second. All those in favour? Oh, done. Great. Right. So, our agenda today is mercifully light. So, we've got our forward work program, health and safety and wellbeing update. There'll also be a verbal update on the fuel situation before the close of our hui. We'll just and a couple of full information papers and a few decisions to make. Jacob, we'll hand over to you. Congratulations for Anzac Day.
Thank you very much.
Jacob got married on Anzac Day, lest we forget.
Yeah, and I'm wearing the wedding suit as well, so it's very exciting.
You can show you the photos at morning tea.
Thank you very much, Frack, and through the chair. I'll take the forward work program paper as read, but I will note the following amendments to the appendix. Obviously, with the Frack workshop moving to a council workshop, we have delayed the risk step dive into the ability to deliver the capital program. However, as the chair noted, the fuel supply monitoring and management approach does have a verbal update at the end of the meeting. The only other adjustment to the appendix is also that health, safety and wellbeing paper is a for information paper for this meeting, and will move to being a full decision paper from next meeting onwards. Thank you very much, and happy to take any questions.
Do any committee members have any questions for Jacob? No, none online. Great. I guess so. Now we can move the paper for the forward work program. Let me just get my little bits together. Right. So we are. We're just approving the forward work program. Can I please have a mover and a seconder? Okay. Okay. Councillor Free moves. Councillor Elders second. All those in favour. Oh, we have a question, or is that a vote? Councillor Makarini. I'm going to assume that's a vote. So all those in favour? Aye.
Right.
Okay. Our next for information paper is the social procurement update.
Good morning, everybody. This morning I'm in front of you as the head of procurement, which is a slightly different guise from what you will normally be seeing me in. I'm just going to briefly introduce the paper and note that Karina Harris, who was to be a presenter, who is the absolute driver of this program, is currently ill. She's watching online, so Hemi Kanji, who is the procurement manager, has stepped in to present the paper. We've focused on the risk elements associated with the social procurement program in line with the terms of reference of this committee. So if you have wider questions, we might not have those facts and figures to hand, and we will go away and get those for you once they're asked. On that note, I'll hand over to Hemi to present the paper.
So I'll take the paper as read, and we've got one verbal update, which is the Modern Slavery Bill has passed its first reading on the 28th of April. It is now with the Education and Workforce Committee, and it's due to report back on the 31st of August this year.
So open the floor to questions.
Oh yeah, any questions from the committee? Yeah, Glenda?
This is an old line. Sorry.
Yeah.
There we are. Just a quick one, just to make it clear. The living wage thing, you will have read when I've been said that I support the living wage, right? What I'm not sure about is, I gather we now belong to something to say that we have the living wage.
Yes.
Yeah, and all I would say is that it's in our annual report. I don't really think we need to belong to something to actually say that, but that's just my position. The interesting thing to me is that this could become an issue. I want the living wage, all right, but whether we are considering the fact that our economic situation is going to change substantially. We're going to have people that we employ, that we contract, and I'm just wondering whether we've got anything in place to deal with those contractors who may not be able to afford the living wage. Do we have a system in place to actually deal with that, especially seeing we've now got an accreditation as well?
Around the accreditation, so it's an annual review cycle that we go through. If the affordability of the living wage becomes unaffordable, we would need to reconsider our living wage accreditation, noting that we have got some big contracts coming up and we are working closely with senior managers on that.
And just to add to that, living wage is currently within budgets, so the next cycle to have a look at whether the affordability criteria is through the long-term plan cycle. So up until that stage, living wage is accounted for in current budgets, and then in the long-term planning cycle, we can look at affordability again.
Okay. Just that reverse thing is that our contractors have to have living wage as well, don't they, under that accreditation?
Correct.
So that's where I see the risk. And don't get me wrong, I'm pro the living wage.
I think it is. I think with the increase coming up in September, it is going to be an affordability issue across many sectors. Councillor Free, you had a question?
I just wanted to ask a bit about modern slavery, which is something quite new. I'm getting my head around this. What does it mean when that we're required to prepare a modern slavery statement? What will that entail? Thank you.
I'll answer this to the best of my ability. Karina has kindly provided some notes around what that modern slavery statement will need to include. So it needs to describe our business operations, the structure and supply chains for Greater Wellington, and our controlled entities. It needs to have any description of any modern slavery incident, a description of any known or anticipated risks around modern slavery, a description of any actions taken to assess, prevent, address, mitigate, and remediate modern slavery risks, the number of modern slavery complaints and investigations of remediation incidents, a description of how we have assessed effectiveness, and any training and consultation undertaken with staff. So that's a quick summary, I guess, of what we would need to include in the statement.
Can I ask another one? So, given that councillors as directors, directors may have some responsibility to make sure this is carried out as well as it can be done, what sort of oversight will councillors have, or how will we know what's being prepared, and what sort of oversight will you have on the statement?
So we're still very at the early stages of planning out exactly how we're going to respond to the modern slavery legislation coming through. We have a working group. As part of that working group, we will assess things like reporting cadences, exactly what we need. Now, just to clarify, the director's liability, or councillor liability in this case, if you are actively involved in the decision or in that particular matter, it's not a global liability on behalf of the organisation. So it is a little bit narrower, but we're working through exactly what you've raised, which is reporting cadences, what do council and councillors need to know, and we will have that ready by the time the legislation is in place.
Okay, and just one more question. Can we have some heads up now as to where the most likely areas that will need some focus might be?
The key focus for Greater Wellington, it's the biggest, most obvious area is public transport. So that's anything where buses are purchased, batteries, anything with lithium extraction, for example. A lot of our suppliers are already reporting on these as part of, because that will be having to report to other entities. For example, Australia already has this legislation. So we'll be able to work with our public transport operators on what reporting needs to be adjusted for the New Zealand legislation, but they'll already be well ahead on that. Other more New Zealand-based focuses will be things like, and things you don't necessarily think of, will be uniforms, furniture production. So there's a range of, but the key for Greater Wellington is public transport.
Would there be any implications for like the centre port?
Not that I can think of off the top of my head, but I can go away and answer that question for you.
Thank you.
Councillor Elder.
I'd just like to follow up a little bit more on that the issue of electric batteries. It's been well established that child slave labour is used in the Congo and other African states for the mining of cobalt, lithium and other minerals used in battery production. Obviously, with the focus of trying to turn the fleet all electric by 2030 or whatever the date is, can we ensure that we get that point clarified before any further electric vehicles are procured?
We can do that, yes.
Councillor Macarini.
Morena Tato. Thank you for this report. I just wanted to start by noting that, just a mihi really to acknowledge the proactive approach that you're taking to this. And given that actually we have accountability as councillors and, group managers and things, it's really reassuring to know that you're doing that, and also to acknowledge that you're working with others. And it's a kind of bigger working group than just Greater Wellington, which I think is really effective, as you know. So it's generally a general kind of question around whether we can just have a bit more regular kind of updates as to where we're at, and if there are any major issues we need to be kind of focusing on to support you guys working through. That's about it.
We're happy to work through whatever cadence reporting that this committee would like.
Thank you.
I have a couple of questions. It's also just on Councillor Makarini's point, just wanted to acknowledge the speed in which the social procurement strategy and this space of work has been developed. I guess it really only started last term, and to see the progress that we've made from what it was before has been really encouraging. And I guess my question is sort of related to paragraph 13, which is the cross-organisational working group and so forth. Just curious to know what's happening with the rest of the sector as well, because obviously we're not the only council or regional council that's looking to have broader outcomes and social procurement approach. And I know that at officer level there's a lot of information sharing there. Are there some trends there that we can also see where we're indexing with the rest of the sector? Maybe there are areas that are in common that are issues, or areas that are of success. Can you speak a little bit to that, Amy?
Yes, there is a kahui meeting established across different councils in the Wellington region. So at the moment, and Greater Wellington is seen as one of the leaders in the social procurement space. I think some of the challenges that we have seen across the sector is that senior manager buy-in.
I can answer some more.
Yeah.
There are active working groups. For example, in the transport space, we do very, very closely, through Karina's amazing work with Auckland Transport, work very, very closely with Auckland Transport in relation to public transport. There is the kahui, so those active working groups. There's an internal working group. And basically, as we work through this process, as you note, it is just in our DNA to actively share with other groups and other councils. So that is definitely part of the working plan as well.
Cool. And then a couple of other things you just noted where there were, I guess there's still uplift to happen. I guess this is not really the report for it, but have we identified what some of those barriers are, and what some of the activities will be to, I guess, get outcomes faster or to change our approach? And within that, when you just mentioned senior management buy-in, or I guess around targets, are these linked to people's performance or KPIs? Are there some mechanisms we can use to encourage buy-in, or to have that sort of as BAU approach?
Absolutely. So within Greater Wellington, we are definitely working with managers to understand what procurements we have got coming up. We've got a wee bit of a forward-looking pipeline, and where there are instances of where we can actively promote diverse businesses, we are. Ones at the moment, you may be aware, we've already got a Greater Wellington supplier panel set up for earthworks, biosecurity and restoration services, so that's around planting. I guess on top of that, we have also got active self-declaration forms around Māori businesses self-identifying themselves. There is a register through Amatai, but it doesn't capture all our suppliers. We also have active, trying to find the right words here, meetings with other people within Greater Wellington to tell them about social procurement, what's in our accounts payable system. So we are out there engaging with a lot of people all the time to encourage social procurement initiatives.
And my last question was, I think last time we were looking at the living wage uplift, there was there were a number of some parts of the workforce in the public transport area that we had identified as needing uplift. I think have we got those numbers and figures, and where are we tracking on that? So not just drivers, isn't it? It's like the bus mechanics and cleaners and so forth.
I don't have that information at hand, but we can definitely get it for you.
Councillor Free?
I just had a little bit of a look at attachment 1 too, and I don't know if we're allowed to make any comments on that or ask questions. I wondered how, whether you would like to comment perhaps, when I look at the creating quality employment opportunities for diverse communities, and then I look at the short-term outcomes, which is more quality local jobs, I kind of wonder if that's exactly the right fit with trying to make more diversity in employment, and whether maybe I see that the medium-term outcome is increased diversity in our indirect employment, but I wonder if that short-term outcome needs to be targeted at perhaps even just a monitoring of the diversity within the regional council contracts, or something that reflects not just quality jobs, but who's getting those jobs. It didn't seem to be quite the right fit with the measure.
So just so I understand the question.
Yeah, there wasn't so much a question on the
So the fact that that we're localizing these issues doesn't prevent us from doing the supplier diversity. We already have tracking systems within our ERP system, so our finance system for Māori businesses, so we can track. Same with Pacifica, same with social enterprises, for example, so we can track those already. Where there is a little bit of lag, for example, so I can give a little bit of, is a lot of our spend, for example, is within one business. So if we drop our spending with that one business, then our stats skew. So aiming at supplier diversity, looking at what's in the market, that's just an active part of what procurement does. So we do the market intel. We go out to market to get this information, and then we will track that. So I'm not sure if that answers your question, but
I think my question is really, is that the right measure? Because really what we have a lot of control on is the short term. Is that the right measure for working out whether we're doing a good job of creating quality employment measurements for diverse communities? Can that measure perhaps be more targeted to a measure which looks at the type of jobs which are being created, or who's being employed in those jobs?
it's probably not one that I can solve at this moment. What I can do is take that one away and work through as to what that particular target is with Karina and get back to you on that.
I'm absolutely not suggesting it to change right now, but it just sort of stood out to me as something that perhaps could be looked at. So thank you for your response.
Any further questions? Cool. That's for information paper, so thank you for that. Our next item is the quarterly finance update. Hello, Ashwin. Hello, Matthias.
Morning, Fracture and FRAG members. So Matthias is our treasury manager who's joining me today. And I've also got Stephen Hill, who's our finance business partner for Environment Online. So this paper presents the financial results of the council for the 9 months ended March 2026. The revenue, expenditure, and capital variances to budget are summarized on pages 30 and 31 of the report. The full year forecast numbers have been updated for the year, and we are forecasting a slightly higher surplus as compared to the original budget. As stated earlier, these numbers only reflect an accounting surplus, not a cash or a funding surplus. And I've got some key points to note for your reference. So one is the Lindrum underspend is a combination of different factors. So one is that the original budget was updated in a way since the contract was signed a bit late than anticipated. Second is there are some built-in contingencies in the project. And the third is there are some general delays on the project as well. Farebox revenue is under budget, mainly driven by the train fare or patronage as compared to the bus one. And with the bus patronage, we noticed a slight increase in revenue in the last month, mainly due to the fuel supply issues that we are noticing. On the fuel front, there is a paper or a verbal update coming later on in this meeting, but from a pure finance perspective and a cash flow perspective, between now and end of June, we are okay at this stage, but we continue to monitor the situation quite closely. And lastly, we are expecting a general rate surplus for the year of just under 2 million, but we are also expecting that to be fully offset by the public transport deficit, which is around 7.5 million. This is very likely to be debt funded, and we will bring a paper to council in the next month or so. I'll take the report as read, and we are happy to take any questions from the committee.
Any questions from the committee? Councillor Free.
I guess I noticed quite a underspend in the capex, quite a significant underspend in the capex. What can we do to better predict how our capex is likely to play out? Whereas I think we've only spent, I don't know, 80 odd million out of 180, something of, yeah.
I'll answer that one.
Okay.
So we are going to do some work in that area, particularly going into the long-term plan with the way that we budget capex. It is an inherent problem in just about all councils. We had 1 year where we delivered very well when we went back to basics and did a blank page start on the capex. This year, the underspend, a significant portion of it is in water, which of course we won't have after the 1st of July. And another significant portion is Riverlink, and we actually need that underspend. It will be part of our carry forwards that we bring to council for approval to add to next year's budget. So it's a timing issue, so it will still be spent. But yes, we agree, as part of our LTP process, we're looking for improving the way that we particularly the way we phase our capex.
And it was just a side comment, sorry. In the nicest way, I would prefer it the way it is than in the reverse.
May I comment?
We'll go Ellie and then to Nigel.
But just to note, of course, though, it is an under-delivery compared to what we have told our ratepayers we will provide for them. So it is a concern and often noted by Audit. The silver lining is the reduction in capex for our starting annual plan and how that reduces the rates next year with underspend in the capex space.
Yeah, kia ora, Councillor Free. Thanks for the question. Well, CapEx is a vexed issue for all councils, as Ali said, but we have actually lent into how we manage and budget our CapEx for quite a number of years, including the zero baseline that Ali spoke about. The LTP is another good opportunity to do that. Look, my biggest test for you as governors is actually we need to be able to explain why there's a CapEx difference. Usually there is a reason. Our failing will be if you don't understand what that reason is. A lot of it is those big third-party projects that we have a certain amount of control, but not all the levers. Riverlink's a classic, Lower Northland Rail's a classic. So you should absolutely quite reasonably expect a really clear explanation Our budgeting will seldom be spot on around CapEx just by the nature of the very large delivery program we have, but we work on it constantly and it comes up every year, and it's quite a reasonable question to ask every year. And our obligation is to provide you with the right answers and keep looking at it. So it's a very fair question.
Any further questions from the committee?
I do have a question. So, what can be done to give councillors more confidence around this paper and the methodologies and underpinning behind it when we are actually being asked to agree that the report demonstrates robust and effective financial management and performance by Greater Wellington, including alignment with relevant financial management and accountancy policies? And personally, I'm not an accountant. It's always seemed like a bit of a dark art to me, to be honest. I have in my time being a maths teacher, so I do understand numbers, but I cannot, in all comfort, agree to that right now because I only got this. We only have a limited time with this paper. I've had to look at it online, and I feel very under informed to with all my hand on heart to agree with that as we're being asked to. So what can be done before the next report to give all of us that want it on this committee complete confidence that we know and understand the accountancy practices and principles and all of the constraints that the organisation's operating in and why the numbers have come out the way they have? Yeah.
I'll go to our chief money person.
Oh, I like my new title. I'm that at home too, by the way. I think you have to take comfort in the processes and procedures that we have and the extensive audit that we have by our external auditor. So they come in twice a year. They do an interim audit and a final audit. They review our policies and our procedures as well as the results. So I often say to people, as accountants, we're more examined than surgeons, and we are actually more looked over than almost any other profession. So we also have our internal audit process, which we bring the results to this committee on where we are improving our processes and where we feel, or where the internal audit picks up that we have a few gaps. And so we have that continuous improvement program there. We also have a team of qualified accountants putting together the reports and looking after the system. So they are required as part of their qualifications to ethically apply themselves to their professional work. So that is the other reassurance with the professional application of the team. And I don't know what else we could do to reassure you that we are operating in that space. The only other thing I'd add is, because you are the FRAC committee, you also get annually an update on our policies and where we are updating and how we are keeping that up to date. So you can also be reassured that we have appropriate policies in place by that annual update.
I understand it's just a new thing that the committee's actually been asked to agree, like in the past these have been for information. Is there another step to this process if we agree that if we agreed as per the recommendation, would that be the end of it, or would it still go to, would this report still go up to council?
A summarised financial report goes to council, yes. It's not quite the same report. It has a little bit less information in it at a higher level based on the governance required.
Okay, so if you haven't in the past asked this committee to actually agree, why has it been decided now that the committee should agree? In other words, we're taking the responsibility of actually agreeing.
I'm looking at Jacob to answer that for me. Yeah.
So we did a full review of the terms of reference as part of establishing FRAC this triennium, and that included looking at all the papers and whether they are for information or for decision. So it was decided that certain papers that, to ensure they did align to the terms of reference, did need to be decision papers. And that was to provide comfort through the likes of the chair's report to council that those reports were giving effective advice around certain parts of the terms of reference, like financial management. So it was part of establishing the new terms of reference, which led to us looking at changing this to a decision paper.
I also remember that we talked about taking out the bit about alignment with relevant financial management and accountancy policies when we had our meeting prior to this. But I see it's still in there. So is there a reason for that?
So I did talk to Democratic Services, and unfortunately the papers had already been put on diligent for this cycle. So we will look at the wording for recommendations for future meetings.
Yeah, because
And
I am
also-
in no way, personally, others on the committee might be, but I'm in no way able to say, apart from believing what I'm being told, which of course I do, but that brings it back to why is it up to us to agree this when we potentially can't?
Yeah, Councillor Free, I think we have examined this issue. If you're happy to put an amendment or another recommendation, if you would like to bring that forward before we vote, I think that might move us forward. Or else we can have a look, have it as an action point to address for our next committee meeting, because I don't think it'll be entirely resolved here. Do you have any other questions or topics? Okay, great.
Can I also offer, we could also offline take any councillor who's interested through the way the reports are put together. The team could do that.
Also, sorry to add, but even on the given paper, if you have any other specific questions, we are happy to. If you can send it to us, we can take you through it after the meeting. Yeah.
I have a list of about 10 at least questions why I don't know where things are in various tables, and I have had to work out how things add up. I've spent my time trying to work out why things are in certain places in the tables, but I have a list of at least 10 questions, which might bore this meeting silly, but I'm probably not going to be able to agree this because I haven't got internally comfort with those questions.
I'm going to pull there wasn't a question in that, but I think maybe the action is that we'll review what is brought forward for the next meeting, and in the interim, if there's an opportunity for councillors who would like a further deep dive of the papers before we have our meeting, let's get that in our meeting cadence. Would that is that satisfactory, Councillor Free? Yes. Great. Councillor Earl, did you have a question, or were you? I saw some movement. No.
Not so much a question, but I am.
You'll have to frame it as a question.
Sorry?
Please frame it as a question. I wonder if.
I wonder if. I wonder if it can be reworked as a more, a less generic recommendation. As it stands, it is very generic. It doesn't offer us a great deal of clarity around what we're agreeing to, and I would ask that a more specific recommendation be provided for us to agree to.
Would it help if we, if Councillor Free and yourself wanted to have perhaps a noting recommendation that for the next time we would like to have something that's a bit more specific to the contents of the reports? I'm not the recommendation writer, as we all know around the around the table. So if you want to craft something like that, perhaps we can add a second recommendation to the one we have in front of us. That just notes that the committee would like more. There we go. What would you like more
of? Would like the opportunity to ask further questions about the methodology used.
I think we're already going to do that with the opportunity to deep dive, but I think it's more that the future papers will note some of the key points that. Yes, Nigel.
Yeah, thanks. Oh, sorry, it's loud. Thanks, Chair. Look, can I make a possible suggestion, bearing in mind the conversation, which is a good conversation, perhaps officers could work with the Chair outside of this meeting. And if you have other questions, councillors or independent member, just feel free to come through to the team to ask those questions. Absolutely, either before the meeting or after. But in relation to this motion, if you don't want to adopt it this time, Councillor Free, that's car pipe. We can work with the Chair at the back end of this meeting to look at the recommendations of the paper. I mean, the purpose of this paper is a quarterly financial update. It is to provide some level of assurance to FRAC, which then does go to Council, that our financial reporting and information that you are receiving for transparency is robust and it is above board and you get regular reporting. So that is the purpose of the paper. We can work more about the agree or endorse or whatever we might want to put in there, so we can go back and talk with them services about it. I've been having a quick sidebar with Jacob. So unless you particularly wanted a different recommendation, I can give you that assurance. We'll do that. We'll work with the chair, and when we come back to the next FRAC meeting, we'll have either a discussion prior to why the recommendations are written what they are, or they will simply be different.
Could I respectfully suggest that I be included in that meeting as Deputy Chair? Thank you.
I actually have some questions about the finance update, and it is to do with that ever-present issue of the CapEx spend and the delay in it. I wonder if it might be useful to, and I think Nigel alluded to it, that when we're in those third-party CapEx projects, that's where we start to see that variance. I think it might be useful to see how we track with our internal CapEx projects, because sometimes in this reporting, it's not easy to see the difference between those where we're in an alliance or reliant on other partners and entities. So perhaps a useful comparison would be to track our own internal CapEx projects to see where we're tracking. So then that becomes a little bit more obvious that some of those externalities are causing that discrepancy. And also just the thing that worries me is that particularly in some of those big third-party projects, the delays inevitably are going to mean an increase in cost as we delay, and that you're almost building a bigger price than the first price tag that you've got. I don't know if we have much control over that, but just I wanted to note that particular observation. But my request is if we could have a sort of comparison between our internally managed projects and the ones where we're in the tent with others. And just second, just another comment, if I may, is that the request for the sorts of deep dives we've got in our workshop is to address some of these issues as well. So for quite some time, the previous council also had concerns around our CapEx spending, and hence the workshop item, which was meant to be this afternoon, around our ability to deliver capital projects. So and I think this relates to the question Councillor Free brought up about what we are agreeing to, sometimes it may not be noted in the formal recommendations, but there are actions that come out in other ways, whether it's workshops or other meetings or other communications that happen that are in response to the analysis that we receive. Right, so shall we vote on the recommendation as it is with the agreement that we have those other actions to work on? So may I have a mover and a seconder that the committee agrees that this report demonstrates robust and effective financial management and performance by Greater Wellington, including alignment with relevant financial management and accounting policies. Have a mover and a seconder. Oh, cool. All right, so I'll say Glenda is to move it and Councillor Makarini to second it. Would you either of you like to speak to the motion? Could I just put the
Yes,
online
I know, it's
people,
recording,
yeah.
I know. Yeah.
Can it travel to Wi-Fi too?
Yes, oh yes. Look, all I would like to say is that the additions of the chair and making that just a little bit more clear between things that we have control of and things that we don't have control of makes this actually very easy to support. Thank you.
I'll take the vote. All those in favour?
I will be abstaining.
Okay, so all those in favour, aye, and council, in favour, yes, aye, and no one against, one abstention. Yeah, and would you like that noted? Okay, great. Thank you. All right, our next paper is the audit engagement and audit plans. And the focus for audit this year.
Good afternoon, Chair and committee members. Today I'm presenting an information paper on the audit documents for the 2026 Greater Wellington audit. There are 3 documents in this paper. There's the audit engagement letter, the audit plan, and the audit proposal letter. The audit engagement letter is I'll start off again. For the year in 2026, GW has been appointed a new audit director. Her name is Fiona Elkington, and which requires a new engagement letter to be issued. The engagement letter identifies the term, the nature, the limitations, and the responsibilities between GW and the auditors. So that's the audit engagement letter. The audit plan focuses on the audit risk issues and timelines for the 2026 audit. And the audit proposal letter identifies the fees for the 2026 audit. The 2026 fee increase is 13,000, which is a 3.1% increase. And this is mainly driven by staff salary costs related to Audit New Zealand. I'll then take the rest of the paper as read and happy for any questions.
Are there any questions from the committee? No, none online. I'll note that I will be meeting with our new auditor in the next month or so. So if you have any further questions that I can put to our auditor, I will be able to do that. It all seems very straightforward to me. So that is just our information paper. Great, thank you. Next item is our fair value assessment property of plant and equipment.
Yes. So this is the decision paper for the committee to agree on the process of how GW is setting the 10% neutrality threshold on the carrying value for an asset class. Accounting standards require GW to revalue different asset classes on a rolling basis. So what happens is in the years when an asset class is not revalued, the accounting standards requires GW to review the balances to assess what the fair value would be. And only once the threshold of 10% has been reached, will GW then, will this then trigger a full revaluation in the subsequent financial year. This is no change in the process. The 10% threshold has always been there, and we just bring it to the committee as a renewal to say that that's the process we will be following. Happy to take any questions.
Any questions from the committee? Yes, Councillor Free.
How do you arrive at the 10? Like, what do you measure to assess whether you've got to the 10%? What do you look at? I think it might be in the paper, but can you just briefly
So,
explain how that works?
yeah, so through your chair, every 3 to 5 years, we do a full valuation where we have got an external valuer that tells us this is your total value, and we look at, as compared to the book value of our assets, what's the increase. And then in the intervening years, we do an internal desktop assessment where we look at by what percentage the values have gone up. So that's a very, like a mathematical calculation that we do every year, which determines the percentage increase.
Okay. All right. Can I ask another question?
Yes.
The 10% you mentioned that's been used up until now. I understand the auditors are comfortable with that value.
Through Chair, so that's correct. The auditors are comfortable with that increase or the threshold, and it goes back to the post-COVID days where, until we had this internal materiality and threshold that we used to do, we used to refer at indices to look at what's the right indices to use for the purpose of valuing our assets. After COVID, all of those indices were not showing accurate results, as a result of which audit were not comfortable with us using the indices. They wanted us to do our own assessment, and that's when that 10% came to fruition, and where auditors are comfortable that as long as the increase is less than 10%, we don't have to worry about doing a full revaluation of our assets. But the moment it goes beyond 10%, that will trigger a full valuation, going to our external valuers and looking at the size and scale of our infrastructure assets. They take around 6 months to do a full valuation.
Just one other question, because it related to something I saw in the report. So for Greater Wellington, the revaluations don't have an impact on rates. Is that correct? And can you explain why?
Yes, through your chair, that's correct. The revaluations do not have any impact on rates because, unlike other councils in the country, we do not rate fund depreciation.
So we don't put aside, what do you call it?
No, we do not have a separate funding or a reserve for depreciation.
Valuation. Okay.
However, our process over here is every capital expenditure is fully debt funded. So in a way, that's the way we recover the funding for the capital renewals from the ratepayers over a longer gestation period as per our financial strategy document.
Can I ask a question though? If you do have a very steep, increase in the price to actually replace something, doesn't it have a slight, like even taking on debt? How would you say that doesn't have any impact on the rates?
I meant it does have an impact on rates, but over a longer gestation period. So, for example, if a project has a 30-year life cycle or a 30-year life, we will debt fund it over a 30-year period. So that way the debt is apportioned over a 30-year period as compared to, say, upfront loading something and then recovering it from the ratepayers, if that makes sense.
So it's true it doesn't have a debt impact in the short term, but it can over the longer term.
Yes, absolutely.
Okay, thank you.
The change in values has no impact on the debt unless we actually replace the asset. So because we only actually debt fund when we get new assets. And this is in the financial strategy that is reviewed as part of the LTP and is one of the principles of having the future ratepayers or the current and future ratepayers who are going to get the benefit from that asset to pay for it through the debt repayment.
Councillor Elder. Oh, no. I had a question around, I guess if this is about, we're looking at depreciation and just marking ourselves correctly on our assets. How do we, given that we're in the process of valuing our flood protection and parks and forest assets, how do we use any calculations or accounting standards around natural capital in that space? Is that something we're able to use? Is it too new to use? Because I know it's something that the private sector do consider. We have a lot of natural capital. How do we factor that into this sort of these sorts of calculations?
Sure, Chair. Very good question. And I think the natural capital question is fairly new from a public sector perspective. So when it comes to valuations, we are in a way governed by what's in the accounting standards, which are then in a way laid out by the external reporting board. So we follow the standards to the T and we get an external valuer. And as far as I'm aware, I'm not sure if there's any consideration for natural capital and how you accommodate that into the valuation. But I think it has been raised in the past when we had the last river link valuation, and I think that was a very hot topic at the time. And I think
it might be, if you don't mind, that I think that's what really triggered it, and it would be worth if you had a minute to just familiarise our new committee with that particularly tricky point where I guess that natural capital bumps up with the accounting standards. Yeah.
So for everyone's reference, Riverlink, for the Riverlink project, as part of the project, we had acquired a lot of land and buildings over the years for the purpose of then bulldozing the whole buildings and then using it for our flood protection purposes. So as we acquired the buildings, we were valuing it every single year. And then at the point of time where we demolished it, we had to take a big hit as a result of the write-off. And again, we were following the accounting standards. So that one particular year where we took a big hit or a write-off, our result looked pretty bad. But again, that did not factor into account that the reason we had done that was for flood protection and also in a way improving the value or the living conditions of the people who live in the Hutt Valley. So that's where the contrast came into play. What we do from accounting purposes and what we are doing from a pure flood protection, flood management purposes.
Yeah. So I guess what happened there was that, you know, the resiliency and the protection that we were able to give all of Te Awa Kairangi, which was the purpose of the project, wasn't able to be reflected in our accounts. It was simply that we weren't extracting the maximum commercial value of that land asset. And I guess that is probably something that also occurs around our water catchments as well, right? Where we do need pristine catchment areas for our, for clean, safe drinking water as well. So no developments there. Just so I guess what would be helpful to know is that in future, if those sorts of because I think that was the first time we approached that, but now that we have that experience, it would be useful to know in advance of when there are projects that we have like that we can get tripped up by that. Because if you just read the auditor's report and the information as strictly financial, without that, it would look really, but it wouldn't pass the front page test. Councillor Free again.
With that, just going back again to the fair value movements that were reported in our report that we've just looked at, the quarterly report, I see that there's 9 million more of a shift in the fair value than was expected, than it was budgeted for. Just since we're talking about fair value, how does that happen? Going back to the quarterly finance update, one of the things that, when I can't even remember the page now, but there was quite a shift in the fair value compared to the budgeted fair value shifts.
Through Chair, if I'm interpreting that, I think it's to do with the treasury transactions, not the fixed asset transactions. Am I?
This is why I couldn't understand. There was a lot in there I couldn't understand. But yeah, $9 million of variance in the fair value did seem like quite a bit.
Yeah, I think from memory that's to do with that is to do with the fair value movements of our treasury related transactions.
Sorry?
It's to do with our fair value swaps. So we have quite a few treasury instruments. For example, when we borrow money, we have a lot of hedging in place to ensure that we are getting the best interest rate impact on the council. And usually those are subject to market movements. So they're non-cash. They're purely book value movements. And depending on how the market is and depending how the interest rate market is moving, you will find ups and downs during the year. And in the given case for the quarter, it is reporting a 9 million variance, but that will keep on fluctuating every single month.
Oh, I see.
Yeah.
I think it was the profit and loss sheet, wasn't it?
Yeah.
Okay.
Yes. Also, just to add, again, thanks to our accounting standards, the way we look at a profit and loss is in two parts. The top part is your pure cash operating spend, whereas the bottom half is what we call as other comprehensive income, which takes into account your non-cash movements like your fair value and also your revaluation movements. So there are two parts to the.
Okay, so it wasn't physical assets that were being revalued in this particular case?
No, okay. These are pure treasury or debt instruments.
Thank you.
Any other questions from the committee? No? Okay. I guess that's. Can I get a mover and seconder for the motion that we agree for the process for setting materiality for the fair value assessment of property, plant, and equipment outlined in this report, including a materiality threshold of 10% of the carrying value for the asset class in the effective accounting policy?
Can we note? Are we able to note with the agreement of the meeting that is notes it's something like noting that Audit has been comfortable with this approach.
Yeah. No.
Thank you.
Yep. Right.
And I'm happy to.
Okay, Councillor Free to
you can move or second it.
Got a seconder. Councillor Elder, because it's going to feature highly. It's good. Lots of cut and pasting in the minutes here. All those in favour? Aye, great. Thank you, team. All right, we now have the risk and assurance update.
Thank you very much, Frank. I am tabling the risk assurance update. I'll take the paper as read, but I will note the following from the paper. There has been 28 recommendations closed during this quarter. Across those that were closed, 4 of them relate to health and safety, which were superseded by the latest health and safety maturity report, which is included as part of the health and safety paper being tabled with FRAC, or an update around that maturity review is being tabled with FRAC as part of that paper. There's also been recommendations around training, new controls documentation, and new speed monitoring dashboard that have now been completed as part of closing recommendations this quarter. We are also looking to seek FRAC approval for the completed 24-27 assurance plan annual review. We note that as part of this review, we surveyed executive and also members of FRAC to obtain their opinions around particular topics. We also investigated any changes in our risk profile or considered any changes in our risk profile, and we also discussed with PwC any hot topics that they had seen from the local government sector. As part of that review, we are looking to undertake the following activities within financial year 27, which is a review of council-controlled organisations and processes surrounding that, core financial controls, data and information, and public transport revenue completeness. I'm happy to take any questions.
Councillor Free?
Yeah, so I don't know if it was this paper, but I know one of our responsibilities as FRAC is to make sure that our council colleagues, that we do that risk appetite process so that we can actually advise staff of the elected members' approach to risk appetite. And I think that we're behind because of very good reasons with some of that work. So can we have some sort of assurance that we'll get back to our colleagues and complete the work that we were going to be doing in workshops around exploring our risk appetite in various areas?
I think you've got a positive update for this, haven't you,
Yeah,
Jacob?
have you? Good. Yeah.
Yeah, so those workshops have been rescheduled. So we have one on the 25th of June and the other on the 4th of August. And a paper will be going up to council post those workshops and consideration of any council feedback on the risk appetite statements at the end of August. So all that work will be completed within August.
And I've just got one more question. So just looking at the ELT dashboard for this paper, and I'm looking at ability to deliver the capital program and seeing that it is rated amber. But I'm wondering if it should actually be rated red, given the, and just your feedback on that, just given the proportion of the capital program that for various reasons hasn't been able to be delivered.
Yeah, so when we look at that recommendation, we look across the entire capital program and also the underlying processes and controls that exist. And we consider risk assurance opinion, plus also the opinion of the risk leads for that particular uncertainty around where it currently sits. Amber is still very high, and it was previously rated as red, but we did see some degree of improvement around processes and controls, and we will be also looking to explore that as part of the risk deep dive, which is now being delayed in August. But yes, you're right, there's still a lot of improvement that needs to be made. We've had several internal audit reports in that space, and we continue to obviously, particularly in those external projects, not meet our budgeted capital. And as part of that workshop, we are looking to explore improvements to processes and controls, such as how we forecast and how we time cash flows, that should help ensure that we better manage our risk in that space in the future.
Could I also add to that, if it's helpful, that I guess in that amber space, amber doesn't mean it's neutral. You know, like there's shades to amber that sort of tend to make it closer to red, or kind of dulling down to an optimistic green. So I guess I am comfortable with that amber, knowing that it could be a more red tinged amber as opposed to more sort of yellow green, and just underlying that also is I guess the only thing as councillors we can focus on are the risks that we can manage and the mitigations that we can manage in those capital projects. Again, noting the difference between the third party ones and our own internal ones. So I guess that's perhaps why it doesn't go to red, because the focus we can have is how we are responding and mitigating and managing those things. Or Nigel or Ali, do you want to add, not to throw you?
No, I thought Jacob, again, to a really good question, I thought Jacob gave a very good answer, and I can't really add anything to what Jacob said in terms of the assurance process, how we reevaluate the CapEx program and test it pretty robustly. And again, a little bit goes back to what I said earlier. If we can't explain or determine the underlying reason why that CapEx is off track, then that is a problem. If we can, that suggests it's more of an amber thing to keep watching rather than a red.
Just another question. Do you see similar risks in the OPEX space, or do because there's been some sort of unexpected positives and negatives there too? Do you see similar risks, and have we got that appropriately flagged?
Yeah, so we've flagged two risks in that space. Obviously, one is around the impact of reforms. So that's going to, we're undertaking, across the local government sector and the wider government sector, there's several reforms that could have significant impacts for Greater Wellington. So we are tracking and monitoring those through a reforms working group that meets monthly. To ensure that we can have robust timelines to ensure people are aware of those changes. The other one is around the effectiveness of planning. Obviously, there's a lot of uncertainty in the planning space, and one of the key controls around that is ensuring that we have an annual plan and also a long-term plan that is adaptable and can flex with the reforms as they come through. So yeah, even in the OPEX space, there is a lot of uncertainty there. Yeah.
Any other questions from the committee? No? Okay. I had a couple of questions. One was, Jacob, it would be helpful to understand in paragraph 7 the capability delivery that was in the assurance plan has been replaced with conflict of interest audit. Am I right in understanding that's to align with the focus of audit this year?
Yeah, so while we do annual review, obviously things can change during the year, and one of the things that obviously changed was we identified that processes could improve in the conflict of interest space. So we wanted to ensure that there wasn't anything that were missing in that space, and obviously those controls are very critical in terms of from a fraud and corruption perspective. So we moved pretty quickly as both a team and also as part of FRAC to ensure that we updated the assurance plan there, which led to the addition of that new activity, conflict of interest internal audit. That internal audit's been tabled with FRAC in August, but obviously that because there's limited capacity within that program, it did mean that an activity had to be bumped from the program due to ongoing improvements within the capability space in relation to learning management system being implemented. It makes sense to delay that activity to 27/30 when those improvements have been implemented.
I guess that was a way of demonstrating agility in the team to change where things crop up that need more attention. So thanks for that. My other question was on page 113, which was around delivering core services, and I know this is a topic that's come up before around ECC availability of our staff to be seconded into those roles over BAU functions, and just curious to know how that's going and whether we'll be seeing what the timeline is for an update, given our last time we just stood up the office last month. It was last month, wasn't it? I guess what's the timeline of seeing some of the findings from that we can act on to see improvement in that area?
Yeah. So in relation to that uncertainty, obviously there's been significant activity in the ECC space, which has led to some degree of delay around improvements to, some delay in terms of that improvements program. So I'll touch base with Sam around when we can expect to have an update around that. But obviously Sam is attending in relation to a fuel update, so that covers off some of the activities of these.
I guess there's two questions from that. One would be that that stand up from the floods a couple of weeks ago would maybe demonstrate if some of the interventions have worked, and also what are some of the areas of improvement. So that would be interesting to see that. Nigel, you had something to add.
Yeah, thanks. Great question. Look, there's been actually, in my view, a huge area of improvement. So the events of a couple of weeks ago, very across the region, ECCs and EOCs across the region actually responded. That's one of the biggest regional events we've had in a very long time. In fact, it actually literally swept through the whole region with the exclusion of possibly a little bit of Kapiti, and Potoroo got hit in part as well. And then it went through Wellington City, up the western side and over the hill into the Wairarapa. So the whole region was activated. We have never had a state of emergency in this region across the entire region. And I think by all accounts, a lot of learning, debriefs going on, and post-event reviews, etc. But in relation to the ECC, we had a good roster that was stood up very quickly. We worked really closely with Remo on that stand-up. The group controller, Carrie, I think had a very positive experience with us, and we put a lot of effort into this at the executive level, along with Remo, to really mobilise this organisation to fulfil our statutory obligation, which is to resource the ECC. It is always going to be an ongoing requirement for us, and an ongoing challenge, but I feel that if the proof's in the pudding, so to speak, we did a very, very good job in April, which improved on the job we did in February, actually, because some of the learnings we put into place immediately after February. So yeah, Samantha Church does come in. We can also talk about this in a bit more detail at a future FRAC meeting, because I think it's a really good thing to maintain a focus on.
And just my other question was on page 119 around procurement. Maybe I should have included this in the social procurement update rather than now, but just some of the evolution that we're going through with some of our retrospective contracts and so forth. I was just curious, again, much like the previous question, do we have a timeline of knowing how long that evolution will take? Deb, that might be a you question. Just vibes, push it out. Under promise, over deliver.
So the short answer to that is that there is no specific timeline for that evolution, because it's very much dependent on staff capability at the time. So we basically expand and contract and work faster when we can and slower when we can. So there's no set timeline by which we meet that. Does that answer your question?
Any other questions?
Could I just make a comment, Chair?
Yes.
Another one area of interest is around simplifying local government. This is always reported on. There is going to be an announcement on that today. Around 12:30, 1 o'clock today, there'll be announcements from Minister Watts and Minister Bishop as to the next phases of that, which takes into account the feedback that was received by many organisations and councils, and then they will be outlining what the proposal is for the next phase of that process. So that is today.
Cool, thank you for that. Right, so we no further questions from the committee, so we can go to the recommendations, where we agree that the risk and assurance reporting provides coverage of the committee's responsibilities to review the effectiveness of risk management policies, systems and processes, and actions taken to address recommendations from completed audit reports. And the second recommendation is that we approve the completed 2024-2027 Assurance Plan Annual Review. Can I have a mover and a seconder? Councillor Elder. Oh, and Linda Hughes. Would either of you like to speak to the recommendations? Nope. Okay. All those in favour? Aye. Aye. Cool. Councillor Macarini, get a hand there. I'm assuming. Yep. Great. Okay. Passed. Organisational climate change risk for information. Melanie and Jake, welcome.
Good morning, thank you. Sorry for my croaky voice. So this paper was all about our climate change organizational risk, and I will take this paper as read and happy to answer any questions you may have.
Any questions from the committee? Councillor Free?
Not really a question, but just to say I did enjoy reading the report, so thank you for the work.
I had a question around, and it might have been due to my literacy or comprehension, and it was around the transition risks in paragraph 17, and I guess the governance aspect of it. I wondered if those statements reflected liability around, liability in the insurance space in terms of decisions councils have made around land use and so forth, and that will have, I guess, reputational and financial and private insurance implications. Is that covered in there, or is that just focused as point? Was that 5, and governance just focused on Te Tiriti?
So I guess it wouldn't be covered under governance, because there's other risk that would be probably better. That would probably better describe this issue. And we have one that relates to insurance as well, and we also have the reputation. So it's all integrated into transition risk, but governance really focused on the risk of maladaptation if we do not account properly for climate change, and another risk would be institutional arrangements if they are not fit for purpose, and if they also do not account for climate change adaptation.
Yeah, I guess there was in the attachment impacts from climate change to Greater Wellington's budget and revenue.
Yes.
And there was loss of revenue. And I suppose, like, given the last workshop we had around climate risk and insurance, it would be good to see that as a sort of a bit more clearly stated.
Okay.
Rather than just, I know there's Te Tiriti risks, but some of the governance risks are the decisions we make around land use, some things that might relate to our regional spatial planning and so forth.
Yeah, that's something we could do and be clearer on, especially on the one breaching Te Tiriti obligation.
Yeah. Councillor Macarini, you have a question?
I was actually answered, but while I'm talking and have your ears, I just wanted to also say this is a really helpful paper, so thank you for that. Just kind of jumping back, it's related, but jumping back to the emergency management, and also particularly from our perspective around Te Tiriti obligations and ensuring that we whether we can ensure that we have some sort of kind of measures and action plan around mitigating risks in the planning stages, because I totally agree with Nigel's comments on the response and how well it was, but I think that the application on the ground from what I saw anyway, highlighted some kind of gaps that could be risks for us around those issues, around utility obligations and involvement in planning and emergency response. So just wondering if we can kind of incorporate that into next steps and when we're looking at things.
Thank you, through you, Madam Chair. So in the OCAP, which is the Organizational Climate Adaptation Plan, we do go through all the measures that are currently being taken. We also identify the gaps and potential measures to close those gaps. So it is going to be definitely included into the OCAP. There is a lot of conversation happening with Te Inga Whiriwhiri to making sure that it's all included and well understood and planned.
Wonderful, thank you.
Just one question about process. I suppose some of the questions that we've had can be brought to Environment Climate Committee, and that's possibly the more appropriate channel to flush some of these questions out. Yeah. Any further questions? No. Okay. Thank you so much for this information. It was a really, really fascinating reading. Thank you. Our last for information paper before we get a verbal update on is what? Oh, sorry. Okay. All right. Okay. We have the health and safety well-being update. Hi, Angela. A brief one, but things to work on. Yes. The right. Just press it till either of them's like, yeah, there you go.
Did that work?
Yes.
Yay. Perfect. Step 1, success. Kia ora, I'm Angela Kimmins. I'm the Head of Health, Safety and Wellbeing. I'm tabling the Health, Safety and Wellbeing update. I'll take the report as read, but just note for your attention in the paper. So at the previous meeting, we let you know that we were having an external review completed into how health and safety and wellbeing is managed at Greater Wellington. So we've had the outcome of that external review now. And we've been working through developing a initial 6-month work plan to address the highest risk recommendations from that report. So the review did identify a number of areas where Greater Wellington are doing really well in health and safety, notably that our leaders have really good intent, that the organisation's really keen to learn and grow and improve in health and safety, and that there's a really strong awareness of health and safety challenges within the organisation, but it did also identify some areas where we can improve our health and safety system. So that 6-month work plan will help to address some of the more high-risk things for that. And we've got further work obviously planned post that 6-month work plan to keep on with that continual improvement piece. We're also keeping a watching brief on the Health and Safety at Work Act reform proposed changes. The next reading is due in June, which seems really far away, but actually now we're in May and it's scarily not that far away. So we're definitely keeping a watching brief on what that might mean for how we manage health and safety here. Happy to take any questions.
No questions, but we'll have our next update will be a lot more comprehensive, won't it? While you're implementing those recommendations. Cool. Thank you. Looking forward to that. All right, that's the close of our meeting, and after our meeting, we will have the update on the fuel situation. I've now correctly understood that, so now we can have our karakia to close our hui. Thank you all for the insightful and probing questions, and we can have morning tea soon. Karakia. Kia tau te rangimari e, ki runga, ki raro, ki roto, ki waho, aiao ki te aorangi, ka whakamaua ki a tina. Hui e, tai ki e. Thank you, everybody. Cool. Sam is